Harris or Trump? Who do you think is better for crypto? I have no idea. So I will not comment on any election topics because right now I got enough trouble with the U.S. laws. I know they have an election interference law, so anything I say publicly could be taken out of context, so I don't want to touch it. So I don't even want to get close to the line. I don't even want to see the line. So I just want to stay as far away as possible. So no comments. I think both parties are pro-crypto. That's fantastic. A week before I was sentenced, in middle April this year, Elizabeth Warren declares war on crypto. This is like a week before my sentencing. And then the judge sentences me, and then I went to prison. And then by June, Donald Trump is pro-crypto. By end of June, both parties are pro-crypto. I'm still sitting in prison. I'm like, what the hell happened? So should I be just waiting for two months? I think, let me caveat with a couple conditions. So there's a plea agreement which I agree to, and I'm in part of the plea agreement. I cannot say anything bad about the plea agreement, and I don't intend to. I think, look, you enter into a deal, that's the deal. Separate from that, there's the sentencing, which I got 4 months for incarceration. And then there was the process going through the prison experience. So in terms of sentencing, the judge has a really tough job, right? So if you ask one side, they will say, it's too lenient. If you ask the other, my side, it'll be like too harsh. I don't care. I don't think about it's fair or not. So I can give you a couple of data points for people to benchmark. For this particular violation, which is a Banking Secrecy Act violation, we didn't register a financial company in the U.S. when we had U.S. users, and we failed to implement an adequate anti-money laundering program. For this particular violation, no one ever went to jail for a single violation, which is my charge. So I'm the only one who went to jail for this in U.S. history. And just 2 weeks ago, there was TD Bank got fined for like $1.8 billion. And when I was reading that, there were cases. I think you described that there were executives taking money to facilitate transactions, and no one was named. Just the company was fined $1.8 billion. But fair or not, that doesn't matter that much. And then the judge also said a bunch of really nice things about me in court. Right, so he said, look, he never seen that many support letters, seemed like a nice standing guy. But then he said he doesn't have to follow precedent. That's when I knew things were not good. And I'm not supposed to be involved in any day-to-day operations of the company. My shareholder rights, as far as I know, I'm not impacted. So today I'm still a large shareholder of Binance. I believe I can still request for information, etc. I just cannot make decisions or give orders. So, the relationship is actually a pretty good one, given that now there's a bunch of other guys working really hard, and I'm forced to retire. So when that first happened, the first month was a bit difficult. It was emotional. It was difficult to detach. It's a company that I put my heart and soul in, and for 7 years, etc. But I always thought, the CEO should not be on the post for more than 10 years because the world changes, right? Now there's AI. I didn't spend a lot of time learning about AI before. I didn't have a lot of time to look at even DeFi in a lot of detail, right? So so now I actually have more time to look at all of those stuff. So I think it's good that looking back now, it was actually there's a lot of good stuff about being forced to step down. See, if I step down myself, if I say, hey, look, guys, I'm quitting, a bunch of you guys will be pissed off, and so like this guy ran out of stamina, and so now I'm forced to step down, and so I'm like, well, this is not my choice, but
welcome to the Crypto Teacher, and I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And we have CZ from Binance asked about whether Trump or Harris will be the best candidate for crypto. And of course, he doesn't want to touch it. Says he had enough of the U.S. But he does say how quickly things have changed. We have both parties are in favor of crypto. And CZ talked about his sentence. No one never went to jail for what he did, But then he brings up TD Bank. And they did a lot worse, but no one was named. This is a slap on the wrist, just a fun. But we know that Binance doesn't know. The banks are the biggest what? I'll let you finish that. But he's still a big shareholder in Binance and says that a CEO should only last about 10 years. And we know if you're not the founder and you worked your way all the way up to a CEO, you're not trying to give that job up for 10 years. Not the millions and millions of dollars that these CEOs get paid. And remember, the crypto teacher told you. And will the Fed cut rates? But if you listen to her very closely, she admitted it takes a couple years to get us down to 2%. Why, guys? Because rates take a while to seep into the economy. And now that they have, the Fed should have cut us about 200 basis points automatically. But of course, they're not going to do that because that's not a part of the plan. They want to destroy this legacy market so the fourth industrial revolution can rise. And we have Japan. And Japan will start to raise rates in a few months. And it's going to cause a rumble in this economy. And we see the Fed already trying to get ready for it. And of course, if Japan is affecting America, it's affecting the global economy. Remember, the United States dollar is going to lose that world reserve currency, and we're going to a level playing field, but that's going to hurt a lot of nations. And remember, the crypto teacher told you. And we have Elon Musk says there's going to be a lot of hard times in America. All this government spending is going to come to an end. And it's going to be gradually. But remember, guys, Trump is only going to be in the office for 4 years. This is strategic. This is planned. They could have easily allowed him to go for the 8. No, they wanted him to come back for these 4 just to land us in this fourth industrial revolution. And he's going to hand the keys over to take the sheep inside the metaverse. Don't forget, Elon Musk is setting us up for this fourth industrial revolution. When you look at Tesla, energy storage, self-driving, robo-taxis, Starlink, Neuralink, it's all for the fourth industrial revolution. And we have big tech stocks are just playing the algorithm, lowering their guidance, easy to hit. And of course, once this algorithm sees that, they get to pumping. And for no reason. We have trillion-dollar companies. Guys, we know that's impossible. And remember, the crypto teacher told you. And of course, guys, in order for them to bring in the fourth industrial revolution, the drums have to beat. And the drums, the military is turning over to technology, drones, weather wars, cyber attacks. No more man-to-man combat. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. Y'all have a wonderful day.
Futures following the jobs report, as you can see, they like what do they like? They like the Fed to cut rates, and this makes it more likely now up 180 on the Dow Jones, NASDAQ up 90. Take a look at Treasuries, which we haven't seen a lot of, actually 423 now on the 10-year. We were at 430 for a little while, but 12,000, at least on face value, right. Sounds like it's weak, but we're still at 4.1. So not that much change.
Well, let's dig into this because now to discuss the jobs report, the implications for the Fed, the distinction between those ADP numbers, and today, Cleveland Fed President, former Cleveland Fed President Loretta Mester, she is now an adjunct professor at the finance at University of Pennsylvania's Wharton School, a CNBC contributor as well. Good morning. I'm so curious, as you saw this number across the tape, what was your first reaction?
Well, we expected it to be affected by the hurricanes, and I think that's what we're seeing in that report. We knew it was going to be a mixed read, and there was going to be a lot of noise in it. I was glad to see that the unemployment rate stayed at 4.1, so that gives you some indication that things are not, as weak as that payroll number suggests it was, and that it was affected by some of those hurricane effects. I think Steve before talked about the number of people out of work because of weather was quite high, so I think that's a noisy reading, and I think what the Fed will do is they'll take that into account when they look at all the other indicators that came in since the September meeting.
So when you think about what the Fed's going to do next week, they will do what?
Yeah, to my mind, it's not that hard. I mean, it seems pretty straightforward to cut another 25 basis points. I mean, if you look at all the data that came in since the last meeting, it really hasn't changed the baseline narrative, which is, look, inflation has come down quite a bit from its peak. There's more confidence it's going to continue to move down, but we know it's going to move down gradually. We're not at 2%, and if you look at the SEP from September, it takes a couple of years to get all the way back to 2%, but more confidence it is on that downward track. And the employment part of the mandate, we know it's moderating, but still the readings are healthy. So what you want to be doing is that the economy normalizes. You want to be making sure that you're normalizing policy so that it stays really well calibrated to that economy. And importantly, you want to make sure that you're always positioning policy so that no matter how the risks manifest themselves, you're able to respond. And I think that's kind of what the narrative was at the last meeting. They did 50 because they were concerned about, I think, the labor market weakness that they saw in some of those readings in the summer. Now, of course, some of that was revised away, but there hasn't really been a big change in sort of what the baseline view of the economy is. Now, that could change as we get more data going into the winter and early in January, and that's going to be the task of the policymakers to just really analyze.
What do you make of the argument, and we heard this from people like Mark Rowan, who runs Apollo Group. He came out publicly and said there shouldn't be any rate cuts. The economy's doing fine or more than fine.
So that's a short-run focus. I think what the Fed has to be doing is looking at, how's the economy going to fare in 6 months from now, 9 months, 12 months, because that's when the policy that the Fed sets actually has its impact. So I think my view would be that I look at all the data coming in. It really hasn't changed where I think the economy is headed. And so that means that we should be continuing to normalize a bit, but we may, want to be careful about that because there are, risks on both sides. And so I think the downside risks are less than they were in September, but my basic view of the economy hasn't changed that much that I would say pause. Also, I mean, you remember Rosanna Dana? It's like, never mind. Yep. They changed kind of what their view was the last time, right? They came out and said, look, we are more confident inflation is going to get back to 2% in a sustainable way. We see the employment moderating. We want to recalibrate policy to be for that economy. It would be kind of hard to get into my mind, at least, sort of like, okay, you said that in September. Now your whole view of the world has changed based on the data that's come in. Now, sometimes the world can change very quickly, but not based on what we've seen.
In Japan, with regards to the Bank of Japan's path towards higher rates, they're looking very much at kind of sort of better growth prospects there. And I think Ueda in his press conference is being quite sort of hawkish, suggesting that they are going to have to raise interest rates in the next few months.
Elon Musk says that there will be, quote, a temporary hardship in the economy if, in fact, and he's obviously supporting Trump. He says there will be a temporary hardship. Somebody went on Twitter, said if Trump succeeds in forcing through mass deportations combined with Elon's hacking away at the government, firing people and reducing deficits, there will be an initial severe overreaction in the economy. They talk about the markets will tumble. And Elon Musk writes back, sounds about right. He later goes on to say there will be a rapid recovery to a healthier, sustainable economy on the other side. Like, that's what he's hoping for. But the fact that he said sounds about right, I think some people who are thinking about the economy say, okay, well, if he's willing to accept that there's going to be hardship, do the American people who are voting for this, are they willing to undergo hardship for 2 or 3 years? Maybe 4. It's hard to know.
Andrew,
it's
I
not a
think,
6 month.
a lot of people say a lot of things, and they say them for different purposes.
Right.
But you can just go back 4 years and see what he actually did, and the economy was doing great. And he did initiate tariffs on China and other places.
Right.
And there wasn't a great drop-off. In fact, the economy was doing great. Inflation was low, and employment was high.
You don't think he's going to try to do a lot more things? I mean, a lot of what he's talking about, especially if there's a red sweep, you would think the taxes become totally different. The tariff piece, obviously different. If Elon Musk gets in there, by the way, I think we all would like to see government spending to come down, no question.
Yeah.
But the public needs to understand that if we're going to slash and burn potentially millions of government jobs, which maybe we should do, the question is how you do it. Do you do it with a scalpel or do you do it with a hammer? I mean, I think
I think the best thing to do is if you take a look at DJ Trump's history, what he did 4 years ago, and what he's done all along. I think that's the best indicator of how it's going to be. I don't think he's going to use an axe to do this.
100% pure profit from selling to other automakers for those environmental credits. Is that a repeatable business? Is it a business? Is there a reason to celebrate better than expected earnings because of things like that?
Yeah, I mean, Tesla, for me, I'm a growth at a reasonable price investor, and it's very hard with over 100 PE for me to make a good risk reward case in the name, because people aren't really focused on that so much. They're looking at the optionality of what's in the future. And that's energy and storage, where it's about, less than 10% of revenues, but growing over 50% a year. You've got robo-taxis, you've got full self-driving over the next couple of years. And that's what people are really owning the stock for, Joe. It's not as much on the EV side. Obviously, that's the base business that gives them the money to fund all the rest of this. But yeah, I have the same concerns you do, because you do have the tax credits. Obviously, we have a election coming up in a few days, and depending on who ends up in charge, EV tax credits, et cetera, are going to change. But having said that, maybe Tesla's treated more fairly relative to the other car companies that have unions. So, we'll have to see what. We wrote a piece on Monday about what we thought would happen this week, and it pretty much turned out the way we expected, where Google came out first, did very well, set a very high bar for the rest of the companies to report. Then Meta came out, had solid results, but they always guide conservatively in the September quarter for the out year, and the stock sold off, which is what we expected it to do. And Microsoft, the guidance was a problem like we expected. The forward numbers went down for the second quarter in a row. Azure in particular, which is their cloud business, the guidance was poor there. And so that stock got really hit pretty hard. And then you get to yesterday, where Apple went ahead and in the most anticipated cut, they guided the December quarter revenues to low to mid-single digit growth. People are looking for 7%. So that obviously went down again. And then Amazon was the real surprise to me, where e-commerce guidance was actually pretty strong, even though you have one less weekend this year between Thanksgiving and Christmas for people to go shopping. That didn't seem to matter. Business is really good for them. Our two favorites coming out of this, it's the same two favorites that we had going in, which is Meta and Amazon through the rest of this year.
Spending half as much today on defense as we did in the 1980s. We're spending 1/20th as much on defense as we did in the Korean War.
Specializing in U.S. national security and defense.
I think there are two problems, David. One is that we're not spending enough, and two is that we're not spending wisely enough. We need to be spending money on low-cost, high-tech, affordable, unmanned systems and other capabilities. The most frustrating part of this story is that there are lots of really talented, dedicated people that are trying to change this whole process, and they are swimming upstream.
Going to a different economy, and we're going to be learning more about that as we go, but clearly we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year, 6 to 8% of global GDP, is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Yashu and Grandma Tanya save New York. Long COVID 33, Part 3. King Yashua and Grandma Tanya goes to China.
It's mandatory to get Part 1, Part 2, and Part 3 of this series. It's time to re-educate Generation Z.